What's the next step? The China report, the next step for China's bull markets. Where do I look for the next step?
Yeah, I think, for next year, we still remain bullish. To me, I think the big change is really the global monetary order reconstruction from a strong dollar to a weak dollar, and then from China-U.S. constantly in the trade negotiations to a G2 framework. And then probably more importantly is the DeepSeek moment, not just in AI, but many other industries, whether it's manufacturing or it's cultural or it's biopharmaceuticals. Almost every industry have received their own DeepSeek moment. That, I think, together is the fundamental for a bull market, slow but a bull market. Maybe for the first time in a long time, we'll finally have a slow-moving bull market.
Dave mentioned, right, the secret sauce has been liquidity that's been driving a lot of this rally.
Yes.
Do you see anything on the horizon that could disturb or disrupt this sort of liquidity?
Well, in general, if we talk about liquidity, it's central bank believed to be, they control the liquidity. I think, probably from the U.S. perspective, the Fed is probably, they may pause, but still, in general, is going to be eased further. And then China, of course, I think the central bank monetary policy will remain supportive. That we talk about, dynamic shift of, central banking policy. In addition to that, I think probably more importantly, for a given liquidity, where is the money shifting around within the system? Right. For that, I think, clearly to me, money is going to shift more towards Asia, towards Hong Kong, towards China. So I'll give you a number. Of global actively managed money, 56%, that's from the EPFR, 56% is in US asset, 3% is in German asset, only 1.8% in Chinese asset. So that shows too much concentration in dollar asset. To me, that, that's what I meant by global monetary order reconstruction. We need more diversification from U.S. asset towards other currency, and Hong Kong and China are going to benefit from that.
Let's talk about the specific opportunities that active manager subset can look at in the markets. I think this year we've seen almost cycles and rotations between winners. We've seen tech and AI. That's gone into financials and dividend plays. It's gone back out into tech. We've had a materials... New consumptions like Laopu Gold, Pop Mart. And then it's gone back into materials and rare earths, and now tech is back. So do we continue this sort of pattern of big winners, big losers within the market and the opportunities there? And where do you see the next one?
I think, we do see, the shifting pattern. Some sectors rise, and then other sectors, if they haven't risen enough, they're going to rise again. But to me, I think, this maybe, if you have a sustainable, slow-moving bull market, that means probably you will see those who hasn't risen enough, they are catch up. They were going to catch up in this year. So there are a few sectors I still, remain very positive. Even in terms of AI, I think, China and the US both doubling down on this AI race. So I still very positive on that. And then that maybe more on the offensive side. On the defensive side, I think, the high dividend space and the traditional manufacturing space, the anti-involution campaign is taking effect. That's also going to boost earnings, boost, price. That's also going to help corporate bottom line. So I think, probably 2026, the market is going to be more balanced.
You mentioned in your report about scarce assets. Can you kind of define what that is? And how do you determine what's scarce, depending on where we are in the credit cycle, and where are we right now?
Oh, scarce asset. This thing can shift very quickly. It also depends on international sentiment. This is for example, if something happens, say in Nvidia, in the AI space, and then this is the China and US market move, very in lockstep with each other. But I say, the scarce, you have to be careful. It's scarce in a point of time. It doesn't mean it's really, if you really believe in the AI story, AI narrative, it may look it may look abundant at a point of time, but in the longer run, it still looks scarce. It's still, very much in the making, if you believe in the long run story of the narrative.
Right.
Yeah.
The common pushback we get when we talk a lot to international investors, that active cohort that still is overweight the U.S., they point to still the lack of momentum in the recovery of the economy and the lack of inflation.
Yes.
What are your comments on that, and what's the pushback against that? What's the case for the market to broaden out? Is the rally to broaden out? Is my question amidst that reality?
Good question. Yeah, I think well, we are not out of the woods yet. Inflation this year is around 0 CPI inflation. PPI is negative around 2%. But I do believe the biggest negative shock is behind us. So probably for next year, we are looking at a CPI slightly above 0, or like around 0.5%, and the PPI also improving a little bit. Why I'm saying that? I think it's both supply and demand. On demand, the drag, the negative drag from real estate cycle is getting smaller and smaller. And then I also expect central government to do more fiscal stimulus. And then on supply side, we mentioned the anti-involution campaign. I think that that's very important. But probably more importantly, for the broader economic recovery or the strength of the broader economy, it's really we need to do more structural reforms. Because we talk about consumption. Consumption is a function of jobs, is a function of income expectations. The income is a function of jobs. Right. And not only that, I think it's also about social safety net. So in those areas, I do believe China still have a lot of low-hanging fruit. For example, our social safety net for people who retire in the rural area is only 220 renminbi per month, the basic pension. So that has huge room to improve. So these are the areas with low-hanging fruit. I think it's going to be a strong foundation for a sustained recovery and then sustained bull market in China.